Question number 5, Grant Robertson.
Speaker, my question is to the Minister of Finance. What price per tonne of whole milk powder in the global dairy trade auction has been factored into the calculation that there is now a $17 billion shortfall from budget 2015? And if this was not done, what calculation was used to model the effect of, quote, weaker dairy prices, end quote?
The Honourable Bill English.
Mr Speaker, the Treasury does not forecast specific dairy product prices or results from the GDT auction, if only because it's in US dollars. Instead, Treasury use an index of New Zealand dairy export prices based on past experience. Between budget and the half-year update, Treasury lowered its dairy price forecast over the period through to June 2017 by between 15% and 20%, that is, between the budget and the half-year update. In total, between the budget forecast and half-year forecast, nominal dairy exports were lowered by a cumulative $1.3 billion over the 5 years to June 2019. Most, but not all, of the recent price reductions had been incorporated into Treasury's latest forecasts, but we are likely to see further reductions when Treasury revise their forecast for budget 2016.
Supplementary question, Grant Robertson.
In light of the further decline in global dairy prices since the half-yearly update and the resulting further decline in revenue, will he confirm that the $17 billion hole in his budget just got bigger?
The Honourable Bill English.
Mr Speaker, no, actually, because the $17 billion was the reduction in total GDP over 4 years in the half-year update. But of course, alongside reductions in dairy prices, we're seeing stronger immigration, lower unemployment, stronger tourism, and other prices that are higher than expected. So we'll just have to wait and see. But it could well be that there is no further reduction, or it could be that any reduction is driven by, for instance, lower oil prices and lower inflation rather than lower dairy prices.
Supplementary question, Grant Robertson.
If dairy is now of such diminished importance, why was it the only sector specifically named in the Prime Minister's statement in reference to the $17 billion hole in the budget forecast?
The Honourable Bill English.
Well, Mr Speaker, probably because at the time that that $17 billion was removed from the GDP forecast over the next 4 years, it was probably the single biggest driver. In the next forecast, it may not be the single biggest driver. It's already fallen quite some way, and as I pointed out, there are other parts of the economy going very well, in particular tourism, the export of services, which is as big as the dairy industry. In fact, through this year may pass it in size.
Supplementary question, Grant Robertson.
Has he sought assurances from banks in New Zealand about their approach to New Zealand dairy debt in light of projections of a third year below break-even payout and federated farmers saying 1 in 10 farmers are facing pressure from their bank?
The Honourable Bill English.
Well, Mr Speaker, in ongoing discussions with the banks, myself, the Minister for Primary Industries, the Reserve Bank and the Treasury, I think we need to keep in mind here that while prices have dropped further and look like they'll stay low longer than was expected, this is an industry that has a very positive long-term view about its prospects. That's reflected, for instance, in current land prices, and also has pretty solid balance sheets. Which can absorb losses, hopefully not for 3 years, but certainly for 2 years. There will be some farmers with very high debt levels who will be under pressure, unsurprisingly, from their banks.
Speaker.
Supplementary question, Grant Robertson.
Why have he and the Prime Minister insisted for month after month that dairy prices will come back very soon when they were warned in July 2014 that there was a 5-year oversupply of milk in the global market?
The Honourable Bill English.
Well, Mr Speaker, I think the best response to that, I think, is what was published as the government's forecast in the half-year update, or the Treasury's forecast, which accounted for a significant drop in dairy prices. Now, in retrospect, there's all sorts of experts In fact, that's the only way the member seems to be able to demonstrate his expertise. But dairy prices are down. That is one factor of the global economy affecting New Zealand. There are others that are positive. And fortunately, we are one of the few developed countries with the prospect of steady, moderate growth over the next 2 or 3 years, despite lower dairy prices.
Supplementary question, Richard Prosser.
Thank you, Mr Speaker. To the Minister, what is his government's tangible financial plan right now to help farming families struggling with bank debts and the prospect of being thrown off the land, rising farmer suicides, including those found hanging by Fonterra tanker drivers and those who phone our offices in tears talking about suicide, falling returns, and the $167 billion in subsidies paid to their competitors in the US, Europe and Japan, which have just been enshrined by the TPPA?
The Honourable Bill English.
Well, that dignifies it. Mr Speaker, for those farmers in extreme circumstances, there are of course the various rural-based organisations around the country who are well organised and very attuned, the Rural Support Trusts, very attuned to the ongoing mood in the farming community. But the government does not intend to initiate financial support for dairy farmers under pressure.
Question,